This is ETF.com's weekly video series, Talk ETFs. My name is Sumit Roy, and I'm Senior Analyst for ETF.com. This week, I'm talking with Jake Hanley, who is the Managing Director and Senior Portfolio Manager at Teucrium, an agriculture-focused ETF issuer. Jake, welcome to the show.
Thanks for having me.
So Jake, I want to start by asking you about the Ukraine-Russia grain deal. A lot of people listening might have heard that that deal recently fell apart because Russia backed out of it. And the presumption is that now it's going to be much harder for Ukraine to export its grains to the rest of the world. Can you talk about the significance of this deal falling apart?
Well, it's significant because it points to potential escalation, and we've seen tensions and hostilities escalate on the heels of Russia's decision not to go forward with the grain initiative. There's a big concern, and we can go back to when the war first started, that trade out of the Black Sea area could be mitigated, right? That we could see trade volumes go down coming out of the Black Sea. And originally in 2022, we saw corn, wheat prices, oil prices, commodity prices across the board jump because of this war. And then we've had, plenty of exports moving through the Black Sea region. The grain deal was signed and it was moving forward. And so to see that come to an end raises a level of uncertainty about what trade looks like in the future. And the big, bear in the room is Russia. Russia represents 20% of global wheat exports. So right now, it's unfortunate to see Ukrainian grain, get locked into Ukraine. There's ways for Ukrainian grain to come out right now, just not as much as you can get through the Black Sea. But it would be a big deal if we lost Russian exports through Black Sea.
Do you expect that we could lose that Russian grain? Is there any scenario where that could happen? And why are wheat and corn trading around recent lows given everything that's going on?
Yeah, those are two different questions, but they're tied closely together. So I'm going to take them in reverse order. Corn and wheat have been trading lower based on supply and demand fundamentals. Right now, we do have plenty of corn and plenty of wheat in the world. When you look at storage and the balance sheets, we're expecting a good harvest in the United States, for example. Brazil has been producing plenty of corn. So we see that our supply side looks healthy. The problem is the question around availability. And that's where you point to an actual live fire, either an accident, something happens on the Black Sea where a commercial vessel is targeted intentionally, or again, by accident, it runs across a sea mine. If there's some sort of hostility that hits the Black Sea itself, it could hamper exports coming from Russia, where Russia would have to, involve the Navy potentially to escort ships through the Black Sea region, adding costs and time. And that, calls into question availability of commodity exports out of the Black Sea.
Fantastic. Well, a ton of great information, Jake. Thanks so much for your time.
Yeah, thank you.